Right. So today we're gonna take a deep dive into the wealth formula.
Okay.
This is a source that one of our listeners sent to us, and
Mm-hmm.
it really makes some pretty big promises.
It does.
It claimed to have like the secrets to
Yeah.
millionaire level success.
Mm-hmm.
I know that our listeners are already pretty savvy when it
Yes.
comes to personal finance.
Very much so.
But what really caught my eye about this particular source was how much it emphasizes mindset.
Oh, absolutely.
They go way beyond just, you know, basic positive thinking stuff.
Right.
And they get into some pretty interesting psychological strategies.
Yeah, it's really fascinating how they connect mindset to actual financial outcomes. It's
Yeah.
not just about feeling good, it's about
Right.
how that translates into results. And one of the things they highlight
Mm.
is this idea of shifting from a scarcity mindset to a problem-solving one.
Yeah, I was really intrigued by that too.
Mm-hmm.
They argue that instead of saying, I can't afford that, you should ask yourself, how can I afford that?
Exactly.
It seems like such a small tweak in how you think about it.
Yeah.
But I could see how that could have like a ripple effect on your whole approach.
It's about reframing limitations as challenges
Uh.
to be overcome. And they give some great examples in the source.
Yeah.
They talk about Sarah Blakely, the founder of Stanks.
Oh, yeah.
I mean, she started with only $5,000,
Wow.
which is nothing, when you think about the resources that most startups have.
Right.
But she had that problem-solving mindset,
Mm-hmm.
and look what she achieved. I mean,
That's a great point.
amazing.
It's not just about having money. It's about how you think about it and the resources that you have and how you use them.
It's about resourcefulness.
Yeah, exactly. And speaking of thinking differently,
Yes.
the source also really stresses the importance of building multiple income streams.
Oh, absolutely. This is key.
They make this analogy that relying on a single income is like building a house on one pillar,
Yeah.
not exactly a stable foundation.
Yeah, not at all. No, that's a recipe for disaster.
Yeah, exactly.
And they delve into different types of income streams beyond just, the typical active versus passive breakdown.
Okay.
They highlight Grant Cardone,
Oh, yeah.
who I'm sure many of your listeners are familiar with.
Big real estate guy.
Huge advocate for real estate. But what's interesting,
Yeah.
he really focuses on a very particular type of real estate,
Okay.
multifamily properties that generate that consistent cash flow.
So it's not just buy any property and you'll be rich.
Right. It's strategic.
There's a strategy.
Absolutely.
What about some of the other income streams that are mentioned in the source?
Well, they talk about dividend stocks,
Mm-hmm.
but not just in a general sense. They actually go deeper into
Yes.
dividend growth investing,
Okay.
where you focus on companies that consistently increase their dividend payouts over time.
Yeah.
So it's a way to build long-term wealth and hedge against inflation.
So it's more specific and actionable than just saying invest in dividend stock.
Exactly. Okay.
Yeah. It's about having that strategy.
And I see they also touch on high-income skills,
Oh, absolutely.
which seems particularly relevant in today's economy.
It is. The skills are your most valuable asset
Mm-hmm.
in this game.
Yeah. So what do they say about that?
Well, they highlight sales and marketing
Okay.
as essential skills, regardless of your industry.
Interesting.
In the past, these might have been seen as kind of soft skills,
Right.
but they make a really compelling case for why they are now crucial
Mm-hmm.
for anyone who wants to thrive
Okay.
in a competitive market.
And they even connect that back to mindset. They
Yeah.
were saying that mastering sales is really about overcoming fear of rejection,
Absolutely.
building that confidence to promote your ideas.
It's not just about making money. It's about personal growth.
Yeah.
Yeah, developing those skills.
And it's not just traditional sales either.
They talk about the rising importance of digital marketing
Yes.
and how those skills can apply to everything from freelancing to e-commerce.
Absolutely. It's a broader skill set.
Yeah, I was really surprised by how much they emphasize the digital side of things.
Yeah.
It seems like they're really encouraging people to think about how technology can
Mm-hmm.
amplify their earning potential.
Absolutely. And this ties into their discussion of specific tech skills,
Okay.
like coding, data analysis, things that
Yeah.
are only going to grow in demand,
Right.
offer the potential for very high salaries.
So it's not just about working harder, it's about working smarter
Yes.
and choosing fields that are
choosing the right field.
aligned with the future,
Absolutely.
with economic trends.
Yeah.
But of course, earning a high income is only one part of the equation.
Right.
They dedicate a good chunk of the source to investment strategies.
They do.
So what do they say about that?
Well, they break it down into three main approaches:
Okay.
stocks, real estate, and cryptocurrency.
Okay, those are the big ones.
The big three, and what's interesting is they don't just give you a surface-level overview.
Okay.
They actually go into specific strategies
Hmm.
and even mention, like, particular metrics that investors look at.
Like what? Give me an example.
So, for example, with stocks, they talk about the importance of not just picking individual companies,
Okay.
but also considering index funds.
Okay.
They explain how index funds track a specific market index, like the S&P 500,
Hmm.
and they offer built-in diversification.
Wow.
They even get into the debate of active versus passive investing,
Right.
which is something that most introductory finance books barely even touch on.
Yeah, I'm starting to see why you said this source goes beyond the basics.
Yeah.
They're not just giving generic advice.
Yeah.
They're providing tools and frameworks to think about this
Yeah.
in a more strategic way.
It's about empowering people
Yeah.
to make informed decisions.
What about real estate and cryptocurrency?
Yes.
Do they get into that level of detail as well?
They do with real estate. They go beyond just the typical, like, buy a rental property
Right.
advice.
Which we hear all the time.
All the time. And they talk about REITs,
Okay.
real estate investment trusts.
Greats.
Yeah. So these are companies that own and manage income-producing real estate.
Okay.
So you can invest in real estate without actually having to buy and manage properties yourself.
That sounds intriguing, especially for someone who might not have the capital
Right.
or even the time to be a landlord.
Exactly. And they break down the different types of REITs,
Oh,
from those that focus on residential properties to those that invest in commercial real estate,
Got it.
or even specialized sectors like healthcare facilities.
So there's a REIT for every investor, it seems.
It seems that way.
What about cryptocurrency?
Yes,
I know that's a hot topic these days,
it is.
but also a little volatile.
It is.
So how does the source approach that?
Well, they acknowledge the potential for high rewards in the crypto market,
Mm-hmm.
but they're also very clear about the risks involved.
Okay.
They emphasize doing thorough research
Mhm.
and not getting caught up in the hype.
I appreciate that they're not shying away from the potential downsides.
Right.
It's easy to get swept up
Yeah.
in the excitement of a new investment trend.
Especially with crypto.
Yeah.
It's so new and there are so many different opinions and it moves so fast.
But it's crucial to have a balanced perspective.
Absolutely.
So they actually give you specific strategies for mitigating the risk
They do.
in crypto.
They talk about diversification.
So,
Dollar cost averaging.
so they're not just saying invest in crypto, they're giving you the tools to do it
Right.
in a more informed and responsible way.
Exactly. They're empowering people
Okay.
to make good choices.
And one more thing that they mentioned that really stood out to me was this idea that
Yeah.
millionaires don't try to time the market.
This is so important.
It's such a common misconception that successful investors
Right.
can somehow predict market ups and downs.
They have some magic formula or
Yeah.
something.
Like a crystal ball.
Yeah.
But this source really argues that consistent investing,
Yes.
regardless of market fluctuations,
Yeah.
is key to long-term success.
It's the long game.
So it's about playing the long game,
Absolutely.
not getting caught up in short-term market noise.
Not getting distracted by the day-to-day ups and downs.
Exactly.
It's about having that long-term vision.
And they back it up with data,
They do.
showing that even professional fund managers
Right.
struggle to consistently beat the market
It's really hard to time the market.
by trying to time it.
Exactly. Even the pros struggle with it.
So instead of trying to time it perfectly,
Yes.
they recommend focusing on building a diversified portfolio
Yes. Hey.
and sticking to your investment plan.
Absolutely. It's about discipline
Mm-hmm.
and consistency.
Okay, so we've covered a lot of ground already.
We have.
Mindset, multiple income streams, high income skills,
Mm-hmm.
and even touched on some investment strategies.
Yep.
I feel like we've gotten a really good overview of the core elements of this wealth formula.
Yeah, I think so too.
But I'm curious to hear more about these financial pitfalls
Yes.
they mention. What are some of those wealth destroyers that we need to be aware of?
Well, that's where things get really interesting because they dive into some common traps that can derail even the most well-intentioned wealth-building efforts.
Okay.
Things like lifestyle inflation, debt mismanagement, and neglecting to build an emergency fund.
So it's not just about making money, it's also about
Right.
protecting what you earn.
Absolutely.
Tell me more about these pitfalls and what they suggest we do to avoid them.
Well, let's start with lifestyle inflation.
Okay.
It's a sneaky one because it often happens gradually.
Yeah.
You get a raise, you start spending a bit more on dining out.
Mm-hmm.
maybe upgrade your car splurge on a bigger apartment.
Right.
Before you know it, your expenses have ballooned along with your income.
Yeah, it's like you're on a treadmill working harder,
Exactly.
not actually getting ahead financially.
Right.
You're not making any progress. You're
Right.
just staying in the same place.
And they use a really interesting example to illustrate this.
They do.
Warren Buffett,
Yes.
one of the wealthiest people in the world,
Arguably the most famous investor.
still lives in the same modest home
That's right.
he bought decades ago.
Decades ago.
Wow.
Yeah.
That's a powerful reminder that true wealth isn't about keeping up with the Joneses
It's
or
not.
accumulating material possession.
No, it's about financial security,
Mm-hmm.
peace of mind,
Mm-hmm.
and having the freedom to pursue your goals
Yeah.
without being burdened by debt or
Well-
unnecessary expenses.
So how do they suggest we combat this lifestyle inflation?
Well, it's about being intentional with your spending.
Okay.
They recommend creating a budget,
Mm-hmm.
tracking your expenses,
Yeah.
and consciously choosing to save and invest
Okay.
a portion of your income before you even think about spending it.
So it's a mindset shift again.
It is.
Instead of spending first and saving what's left over,
Right.
you're prioritizing. Yeah, you're flipping the script.
Yeah, your future financial well-being.
You're paying yourself first.
Exactly.
And this leads into the next pitfall they discuss.
Oh.
Debt mismanagement.
Yeah. Debt can be a real wealth killer.
It can be.
What specific types of debt do they focus on?
Well, they highlight high interest debt,
Mm.
like credit card debt,
Yeah.
as being particularly damaging.
Makes sense.
Yeah. And they suggest creating a debt repayment plan,
Okay.
focusing on paying down the highest interest debts first. They even advocate for exploring debt consolidation options to potentially lower interest rates and simplify payments.
So it's not just about avoiding debt altogether.
Right.
It's about being strategic
Exactly.
and using it wisely when necessary.
And they're not anti-debt entirely.
Okay.
They acknowledge that certain types of debt, like a mortgage on an income-producing property,
Right.
can be leveraged to build wealth,
Mm-hmm.
but it's about making informed decisions
Right.
and understanding the true cost of borrowing.
Right. Okay. This is great stuff. We've got mindset shifts,
Yeah.
income streams, skills,
Yeah.
investments, and now even debt management strategies.
Mm-hmm.
What's that last financial pitfall they cover?
The final pitfall is the lack of an emergency fund.
That rainy day fund
Yes, the one that everyone talks about.
that everybody talks about.
But not everyone actually has.
Why do they emphasize this so much?
Because life is unpredictable.
True.
Unexpected expenses happen,
Yeah.
medical bills, car repairs, job loss.
Mm-hmm.
These things can happen to anyone.
Right.
And without an emergency fund, you're forced to rely on credit cards
Yeah.
or high-interest loans, which can quickly spiral into a debt cycle.
Yeah. You're right back where you started.
Exactly.
So it's about having that financial cushion
yeah, that safety net
to absorb those unexpected blows.
to weather the storm.
How much do they recommend saving?
They suggest 3 to 6 months of living expenses
Okay.
in an easily accessible account, like a high-yield savings account.
That sounds like a lot, especially for someone just starting out.
It can seem daunting,
Yeah.
but they emphasize that building an emergency fund is a gradual process.
Okay.
You can start small, even just setting aside a small amount each week.
Got it.
The important thing is to make it a priority and be consistent.
So it's about building that habit of saving,
Yes,
just like we talked about with lifestyle inflation.
exactly. It's about those small, consistent actions
Yeah.
that add up over time.
And once you have that emergency fund in place, it provides a sense of security,
It does.
peace of mind that's invaluable.
Absolutely.
It allows you to weather those financial storms without derailing your long-term goal.
Without throwing you completely off track.
This has been incredibly insightful. We've unpacked these key elements of the wealth formula,
We have.
from mindset shifts
Yeah.
to income streams, high income skills,
Yeah.
smart investments, and even strategies for avoiding those pesky financial pitfalls.
Absolutely.
I feel like we've gotten a really comprehensive overview
I think so too.
of their approach.
Uh-huh.
But before we dive deeper into those specific strategies
Yeah.
and examples,
Mm-hmm.
I'm curious to hear your overall impression of this source.
Sure.
What stood out to you the most?
Well, I really appreciate that they go beyond the typical surface level advice
Yeah.
and they offer a more nuanced and strategic approach to wealth building. They're not just telling you what to do.
Right.
They're teaching you how to think about wealth
Mm-hmm.
in a more holistic way.
I agree.
Yeah.
And they do a great job of connecting the dots
Yes.
between these seemingly disparate concepts like mindset and investing,
Yeah.
or skill development and debt management.
They all work together.
It's all part of a bigger picture.
Exactly.
And they back up their claims with real-world examples and
Yeah.
data,
Which is so important.
which makes it feel so much more credible than
Yes.
just a bunch of motivational fluff.
Absolutely.
Yeah, it feels grounded and actionable,
Yes.
which is exactly what our listeners are looking for.
Exactly.
So in our next segment, we're going to delve deeper
Okay.
into those specific strategies and examples.
Sounds good.
We'll unpack those investment approaches in more detail, explore specific high-income skills, and even get into some tactical tips for building those multiple income streams.
Excellent.
Stay tuned for part 2 of our deep dive into the wealth formula.
I can't wait.
All right, do it.
See them.
Okay.
Welcome back. I'm excited to dig into some of these, specific strategies from the wealth formula.
Yeah, me too. Let's get tactical.
Let's do it.
Okay, so we talked about Grant Cardone's focus on multifamily properties.
Right.
I'm curious to hear a little bit more about what the source actually says about that approach.
Yeah, so they actually quote Cardone directly.
Okay.
He says that multifamily properties are the ATM machines of real estate.
Okay.
He argues that they offer a more stable and predictable income stream than single-family rentals, especially when it comes to vacancy rates.
Yeah, that makes sense. If one unit is empty, you still have income coming in from the others.
Exactly.
But isn't managing a multifamily property a lot more work?
It can be,
Yeah.
but the source addresses that too.
Right.
They recommend building a strong team, including a reliable property manager,
Okay.
to handle those day-to-day operations.
So it's about leveraging other people's expertise
Exactly.
and not trying to do everything yourself.
Right.
Which is good advice no matter what you're doing.
Yeah. Okay, so what about those REITs we discussed?
Oh, yeah. REITs.
They sound like a less hands-on approach to real estate investing.
They are.
Yeah.
And the source breaks down all the different types of REITs you can invest in.
Okay.
There are equity REITs, which own and operate income-producing properties.
Okay.
Mortgage REITs, which provide financing for real estate.
Interesting.
And then hybrid REITs,
Okay.
which combine elements of both.
Wow. I had no idea there were so many options.
Yeah, there are a lot of different ways to get involved in real estate. So how do you actually invest in a REIT?
Well, most REITs are publicly traded.
Okay.
So you can buy shares through a brokerage account, just like you would with stocks.
This is a relatively accessible way
Okay.
to get exposure to the real estate market
Exactly.
without having to deal with tenants or property maintenance.
Without the headaches of being a landlord.
Exactly.
Yeah.
And the source highlights some of the potential benefits of REITs.
Yeah.
Like diversification, liquidity,
Right.
and the potential for dividend income.
It's a way to get those regular payouts.
Okay, so we've got multifamily properties and REITs as potential avenues for building passive income through real estate.
Yeah.
What other income-generating strategies does this source recommend?
Well, they actually dedicate a whole section to building online businesses.
Okay.
They argue that the internet has created, unprecedented opportunities for anyone to create and sell products or services globally.
That's true. We've seen a huge explosion in e-commerce and digital entrepreneurship in recent years.
Absolutely.
Yeah.
The barriers to entry have never been lower.
Right.
So they provide a framework for thinking about online business models,
Okay.
from creating and selling digital products like online courses, ebooks,
Right.
to starting an e-commerce store or offering freelance services.
It sounds like they're really encouraging people to think outside that traditional 9-to-5 job
Yeah.
and leverage their skills and passions to create their own income streams.
Absolutely. And they tie this back to the mindset we discussed earlier about taking ownership of your financial future and not being afraid to experiment,
Right.
try new things.
It's about being entrepreneurial.
Yeah, I love that. It's about seeing opportunity
Yeah.
where others might see limitations.
Exactly.
But starting an online business can feel really overwhelming,
It can.
especially if you've never done it before.
Where do you even begin?
Yeah, where do they suggest people even begin?
Well, they recommend starting with a niche.
Identifying a specific target market with particular need or problem that you can solve.
So it's not just about selling anything.
Yeah.
It's about finding that intersection of your passions and what people are actually willing to pay for.
Exactly.
And then they go into detail about building an online presence,
Yes.
creating valuable content, and leveraging digital marketing strategies to actually reach that target audience.
You got to get the word out.
Right.
Yeah.
They even suggest using social media platforms
Oh, absolutely.
to build a community around your brands
Yeah.
and engage with potential customers.
It's all about building relationships.
Yeah.
And establishing trust.
Okay, so we've got real estate and online businesses as potential income streams. What about those high-income skills we touched on earlier?
Yes.
I'm curious to hear more about what the source has to say about specific skills and how to develop them.
So they really emphasize sales and marketing as being universally applicable in high demand across various industries.
We talked about that earlier, but I'm curious about the specific skills within those fields that they highlight.
Yeah.
What are some examples?
Well, they talk about copywriting.
Okay.
Which is the art of persuasive writing that's used in everything, from website content to email campaigns to social media posts.
Ah, so it's not just about being a smooth talker.
Right.
It's about being able to communicate effectively in writing.
It's about getting people to take action with your words.
And they suggest specific resources for learning copywriting.
They do?
Like online courses or books by legendary copywriters.
Like Gary Halbert, David Ogilvy.
Okay, so they're not just saying learn copywriting. They're giving you the tools to actually do it.
They're pointing you in the right direction.
Yeah, which is great.
Yeah.
What about digital marketing?
Yeah, they go into digital marketing as well.
Okay.
Which encompasses a wide range of skills. From search engine optimization to social media marketing, paid advertising, email marketing.
It's basically everything involved in getting your product or service in front of the right people online.
Absolutely.
And they break down each of these areas.
Yes.
And they explain the key principles and provide resources for further learning.
It's a great starting point.
And what about those tech skills we discussed?
Oh, yeah.
I know you mentioned coding and data analysis as being particularly lucrative.
Very much so.
Do they delve into those as well?
They do. They dedicate a whole section to the rising demand for tech talent and the potential for high salaries in these fields.
They're not just hyping it up.
Right.
They're providing real data to back up their claims.
It's not just speculation.
Yeah. What specific skills within the tech realm do they recommend?
Well, they highlight software development, particularly web and mobile app development, as being in very high demand.
That makes sense.
Yeah.
Those are skills that seem applicable to nearly every industry these days.
Absolutely. Software is eating the world, as they say.
And they also talk about data science.
Yes.
Which involves extracting insights from data to help businesses make better decisions.
It's all about using data to drive results.
Right. And they provide a range of resources for learning these skills.
They do.
From online coding boot camps to university degree programs.
So there's a path for everyone.
So there's a path for everyone, whether you're looking for a quick skills upgrade or a more in-depth education.
And they emphasize that continuous learning is essential in the tech world because technology is constantly evolving.
It's not just about learning one skill and then coasting.
Right.
You need to stay ahead of the curve.
You got to keep learning.
And adapt to the ever-changing landscape.
Absolutely.
They even suggest attending industry conferences, networking with other tech professionals.
Yeah, build those connections.
To stay informed and build those connections.
It's a great way to stay on top of the latest trends.
Yeah, that's a great point. Learning isn't just about taking courses or reading books.
It's about getting out there.
It's about building relationships and learning from others in your field.
Exactly.
So it's about stepping outside of your comfort zone and embracing that growth that comes with acquiring new knowledge.
And they tie this back to the wealth-building mindset, emphasizing the importance of being a lifelong learner and investing in your own development.
I love that. It's not just about making money. It's about personal growth and fulfillment.
Absolutely.
And they argue that those who are constantly learning and evolving are the ones who will thrive in the long run.
It's about being adaptable and resilient.
Okay, so it's not just about getting rich. It's about becoming a more well-rounded and adaptable individual. And that brings us back to the investment strategies that they outline. We touched on stocks, real estate, cryptocurrency earlier, but I'm eager to dive a little bit deeper into their specific recommendations.
Well, let's do it.
So they mentioned index funds.
Yes.
But what other stock investing strategies do they discuss?
Well, they go into dividend growth investing, which we briefly touched on earlier. This strategy involves focusing on companies with a history of consistently increasing their dividend payouts over time.
So it's not just about chasing high yields.
Right.
It's about finding companies with a track record of sustainable growth and shareholder value creation.
Exactly.
It sounds like a strategy that rewards patience and long-term thinking.
It does.
Which aligns with their whole wealth-building philosophy.
It's about delaying gratification and playing that long game.
And they provide some specific tips for identifying dividend growth stocks.
They do, like
looking at the payout ratio, the history of dividend increases, and a strong competitive advantage.
Right. You want companies that have a moat around their business.
So it's not just about picking any stock that pays a dividend.
No.
There's a real analysis involved.
There's some homework to do.
And they suggest resources for researching those dividend growth stocks.
Yeah. They point you to some online databases, investment newsletters.
Okay, so we've got index funds and dividend growth investing as potential stock market strategies. What about real estate? We talked about multifamily properties and REITs.
Yeah.
Are there any other approaches they mention?
Well, they suggest exploring real estate crowdfunding platforms.
Oh, that sounds intriguing.
Yeah, it's a newer way to get involved.
How do those platforms work?
So they essentially pool money from multiple investors to fund real estate projects. So it allows individuals to invest in properties that might otherwise be out of reach.
So it's like fractional ownership, but for real estate.
You got it.
And they highlight some potential benefits of real estate crowdfunding, like diversification, passive income potential, and access to exclusive deals.
Yeah, you can get in on projects that you wouldn't normally be able to.
But there must be some risks involved as well.
Of course. They emphasize carefully vetting those platforms and projects just like you would with any other investment.
It's about doing your due diligence.
Right.
And understanding those potential risks and rewards.
Before you commit any capital.
Right.
And they suggest diversifying your investments across multiple platforms and projects.
So again, spreading your bets.
Always a good strategy.
Not putting all your eggs in one basket.
Exactly.
Now let's talk about cryptocurrency.
Okay.
I know this is a topic that generates a lot of excitement.
A lot of buzz.
Yeah, but also some skepticism.
Definitely.
How does the source approach this potentially volatile investment class?
Well, they acknowledge the potential for high returns in the crypto market, but they also emphasize the importance of understanding the risks involved.
I appreciate that they're not just blindly promoting crypto as a get-rich-quick scheme.
It's not a magic bullet.
Yeah.
It's an investment like any other.
They emphasize doing thorough research before investing in any cryptocurrency.
Understanding the underlying technology, the team behind it, the potential use cases.
So it's not just about buying whatever coin is trending on Twitter.
No, not at all.
They caution against investing more than you can afford to lose.
Yeah, that's a good rule of thumb for any investment.
Yeah, especially in a market as unpredictable as crypto.
Absolutely.
And they suggest some specific strategies for managing risk in the crypto space.
Things like dollar cost averaging, which involves investing a fixed amount at regular intervals to smooth out those price fluctuations.
Okay, so you're not buying all at once.
Right. It helps to average out your cost over time.
That's a really smart approach.
And they also recommend diversifying across multiple coins and platforms.
So again, spreading your risk.
Always a good idea.
Not putting all your eggs in one basket.
Exactly.
They really emphasize that investing in crypto should be viewed as a long-term play.
Not a get-rich-quick scheme.
They're really hammering home that message of patience and long-term thinking.
It's a consistent theme throughout the source.
Which is consistent with their overall wealth-building philosophy.
Absolutely.
They even suggest considering crypto as a small part of a diversified portfolio rather than making it your sole investment focus.
It's about balance.
So it's about finding that balance between potential reward and your own personal risk tolerance.
Right.
And before we wrap up this segment,
I
want to circle back to a key point the source makes. Millionaires don't try to time the market.
This is so important.
Yeah, it's so tempting to try to predict those market ups and downs.
Especially when you see all that news and all the hype.
Yeah, but they argue that it's a fool's errand.
And they're right. It's very, very difficult to time the market consistently.
And they back it up with data showing that even professional fund managers struggle to consistently beat the market.
Even the experts have a hard time.
By trying to time it.
Exactly.
This humbling reminder that no one has a crystal ball.
Yeah, we all wish we did.
Right.
But we don't.
So instead of trying to outsmart the market, They recommend focusing on building that diversified portfolio.
Yeah, absolutely.
And sticking to your investment plan.
It's about discipline.
So it's about discipline and consistency rather than trying to chase quick profits.
This is the long game.
And they emphasize that time in the market is more important than timing the market.
Absolutely.
It's about letting the power of compounding work its magic over the long term.
That's where the real wealth is built.
Okay, this has been incredibly insightful.
Yeah.
We've explored specific strategies for building income streams, developing high-income skills,
absolutely,
and even navigating the world of investments.
It's a lot to cover.
It is a lot.
Yeah.
But I feel like there's still one piece of the puzzle missing.
Okay.
That mindset shift that we discussed earlier.
Yes.
In the next segment, let's dive deeper into the psychological aspects of wealth building.
Yeah.
And how to overcome those limiting beliefs that can hold us back.
I love it.
Stay tuned for part 3 of our deep dive into the wealth formula.
Can't wait.
All right, so welcome back to the final part of our deep dive into the wealth formula.
Yes.
We've covered a lot of ground from specific strategies to those mindset principles.
Yeah, it's been a really interesting journey.
But now I really want to unpack this idea of a wealthy mindset.
Yeah.
What makes it different from just, wanting to be rich?
Yeah, that's a great question. And the source really digs into, those psychological aspects of wealth building. They argue that it's not just about tactics.
Right.
It's about fundamentally changing how you view money and opportunity.
So they keep coming back to this shift from a scarcity mindset to a problem-solving one.
Absolutely.
Can we break that down a bit further?
Sure.
What does that actually look like in practice?
So the source gives some really interesting examples. They talk about how people with a scarcity mindset tend to focus on what they lack. They're constantly comparing themselves to others, feeling envious of those who have more, and that can lead to a sense of helplessness and inaction.
It's like a self-defeating cycle.
Exactly.
If you're always focused on what you don't have, it's hard to even see the possibilities that are right in front of you.
It's like you're blinded by that scarcity.
Yeah, and this is where the problem-solving mindset comes in. So instead of dwelling on those limitations, you need to train your brain to look for solutions.
Exactly. And they use this great analogy. Imagine you're faced with a brick wall. Someone with a scarcity mindset sees that as an obstacle and gives up. But someone with a problem-solving mindset sees that as a challenge and starts looking for ways to overcome it.
I like that.
Right? So they're going to try to climb over it, tunnel under it, maybe even knock it down.
Yeah, find a way around.
Find a way.
So it's about reframing those obstacles as opportunities for growth.
Absolutely.
But how do you actually make that mental shift?
Yeah.
It sounds a lot easier said than done.
It can be a process, but the source suggests some techniques. One is to practice gratitude. So instead of focusing on what you lack, take time each day to appreciate what you already have. This helps to shift your focus from scarcity to abundance.
I can see how that would be helpful. It's easy to get caught up in that. I need more mentality.
That constant striving.
But gratitude helps you appreciate the present moment.
It brings you back to the now.
So what are some other techniques they suggest?
Well, another one is visualization. They encourage you to really vividly imagine yourself achieving your financial goals. And the source even cites studies that show that athletes who mentally rehearse their performance actually perform better in real life.
Interesting. So it's about training your mind to believe that success is possible, which then makes you more likely to take action.
Right. It becomes a self-fulfilling prophecy.
Yeah. And they also emphasize surrounding yourself with positive influences.
Absolutely.
People who support your goals.
Your cheerleaders.
And inspire you to grow.
Yeah. You want to be around people who lift you up.
That makes a huge difference.
It does.
If you're constantly around people who are negative, doubt your abilities.
Energy vampires.
Yeah. It's hard to maintain that wealthy mindset.
It drains you.
And on the flip side, if you're around people who are ambitious-driven, believe in your potential.
Yeah. It's contagious.
It can really accelerate your progress.
Absolutely.
They even suggest finding mentors or role models who have achieved that level of success that you aspire to.
Find people who've already done what you want to do.
Learn from the best.
Exactly.
Okay, this is all starting to make sense.
Good.
But there's still one thing I'm struggling with a little bit. What about failure?
Yes.
The source mentions embracing failure, but isn't that kind of counterintuitive
Yeah.
to having a wealthy mindset?
That's a great point, and it's something that they address directly.
Okay.
They argue that failure is inevitable, especially when you're pushing yourself outside your comfort zone or trying new things.
You're going to make mistakes.
You're going to stumble.
Yeah.
You're going to fall.
So it's not about avoiding failure. It's about how you respond to it.
It's about what you do after you fall.
Exactly.
Do you get back up?
They encourage you to view failure as a learning opportunity.
A chance to course correct.
Right.
Refine your approach.
And they share stories of successful entrepreneurs.
Very successful entrepreneurs.
Who experience multiple setbacks before achieving those breakthroughs.
Right. Even the most successful people have failed.
That's reassuring. It's easy to get discouraged when things don't go as planned.
Yeah, we all feel that way sometimes.
But hearing about others who've overcome adversity can be really motivating.
It gives you that hope.
So the key is to not let those setbacks define you.
Exactly.
It's about learning from your mistakes, getting back up,
Yeah.
and continuing to move forward.
It's about resilience.
It's about resilience, persistence, and having that unwavering belief in your ability to achieve your goals.
It's a mindset shift.
It all comes back to mindset.
It always does.
Which brings us back to that initial question of what defines a wealthy mindset.
Well,
it's not just about desiring wealth.
Right.
It's about cultivating those beliefs, those habits, the resilience that will actually allow you to achieve it.
It's about becoming the kind of person who attracts wealth.
So it's about seeing opportunity where others see limitations.
Yes.
Embracing those challenges as opportunities for growth.
And having that persistence to keep going even when things get tough.
And understanding that building wealth is a journey,
Absolutely.
not a destination.
It's a marathon, not a sprint.
It's about continuous learning, personal growth, and making consistent progress over time.
It's a lifelong pursuit.
Wow. This has been an incredibly insightful deep dive.
It has.
Into the wealth formula.
Yeah.
We've explored everything from those specific strategy to the psychological aspects of wealth building.
I think we've covered it all.
I feel like we've gained a really holistic understanding.
I agree.
Of their approach.
It's a comprehensive system.
And more importantly, we've equipped our listener with the knowledge and the inspiration to start taking action.
Absolutely.
So remember, you have the power to create the future you desire.
That's right.
Take that first step, embrace the journey, and never stop learning.
Keep growing.
And with that, we wrap up our deep dive into the wealth formula.
It's been a pleasure.
I hope you found it as valuable as we have.
I know I have.
Until next time, keep seeking knowledge.
Yes.
Keep pushing boundaries.
Yes.
And keep building the life you deserve.
Absolutely.